In this video, I'm going to talk about the difference between the primary market and the secondary market. So primary market transactions, when referring to the financial markets, are transactions in which the company or entity involved issues stocks or bonds. So let's say that we have a company and they issue shares of stock to the public. This would be a primary market transaction. And the key thing to keep an eye on here is that if it changes the company's balance sheet or the issuer's balance sheet, then basically this is a primary market transaction. So a classic example of that would be an IPO, an initial public offering. So this is when a company sells stock to the public at large for the first time. And so when they do that, they issue the shares of stock to the public at large. They're generally going to work through an investment bank to do so. And so they are going to work with the investment bank to issue the shares. And the investment bank is going to work with various other entities and contact them and work with them to get investors to buy the shares. And so ultimately, what's happening is the entity is selling shares of stock to the public and is receiving capital in exchange. Investors are buying the shares of stock. The investment bank, of course, takes a cut for helping. And basically what will happen in that case is this will change the issuing company's balance sheet because they'll have more shares of stock to show as being issued on the balance sheet. They'll have more cash being received. They'll show more equity and more cash typically. And so that would be an IPO of equity, so an initial public offering. Now, there's also an SEO, which is a seasoned equity offering. So this would be if there's a company that is already established, they've already gone public, they've already sold stock to the public at large, and so the stock is already out there, but they sell more shares. And so if they sell more shares to the public at large, then that's going to, again, change the company's balance sheet. This will, again, be a primary market transaction because the company is party to the transaction. And it changes the company's balance sheet. Now, the secondary market for the financial markets is when investors trade securities. So this is actually the majority of market transactions. So if you tomorrow enter into an order to buy a certain number of shares of stock in your favorite publicly traded company, you are buying that share of stock almost certainly, most likely, from some other investor. And so it is not going to involve the company itself directly unless it happens to be selling shares of stock that day. But by and large, what's going to happen is you are going to buy shares of stock from some other investor. And so this is the majority of market transactions. So when you hear about, the stock market went up today, the stock market went down today, or there was a lot of trading in the stock market today, the vast majority of that is secondary market activity. It is trading between investors, and therefore it does not change the underlying company's balance sheet because it is just trading between investors. Okay, so it does not produce capital for the company. The company does not raise funds. The company does not receive funds. It's just trading between investors. Now, it's important to note the company does still care about those transactions because the company is trying to maximize long-term shareholder wealth, and that is often extremely highly linked to the stock price, and therefore the price at which those transactions are occurring matters a lot to the company, and the company has a great deal of interest in that. So the company cares about the price at which those transactions are occurring. They care about who's accumulating ownership and so forth, but it does not change the company's balance sheet. Okay, so that's kind of the difference between primary market transactions and secondary market transactions. And again, the majority of trading on a daily basis in the financial markets is secondary market activity. Primary market activity, it can be easily determined if it's changing the company's balance sheet and the company or entity involved is party to the transaction in some specific way. All right, hopefully this discussion of primary market and secondary market transactions has been helpful. Thank you so much for watching and have a great day.